In this video, we will be discussing the advantages and the possible outcomes of trading the 0 DTE long butterfly option strategy and why you might want to add this strategy to your playbook. First off, let's define what the 0 DTE long butterfly option strategy is. It is essentially a strategy that involves buying an out-of-the-money butterfly spread on the day of options expiration, hence 0 DTE. Now, this strategy is made up of 4 option contracts at 3 different strike prices with the same expiration date, and the maximum profit for this strategy is realized at option expiration. So essentially, you want the market to close at your short strike on the butterfly spread. Now, for a full breakdown of this strategy, see the video link in the description. There are several reasons to why this strategy is attractive. The major reason, probably the limited risk. So the potential losses are limited to the premium paid. In other words, it is a debit strategy, which can be a great way to manage risk and avoid huge losses. So very stress-free, unlike the credit spread. This strategy also has a high potential for profit if the market moves in your expected direction. So more often than not, we trade this as a directional strategy, but profits can be quite significant from 300, 500%, or even up to 1,000% ROI. Now, since we trade the 0 DTE, it is also a short-term strategy, which makes it ideal for potential quick profits, and we don't have to hold the position overnight. This strategy is also very flexible, so any trader can take it and really adjust it to suit their individual needs, adjusting the strike prices, the number of contracts, and so on. In addition, there is very low capital requirements. Recall, it is a debit strategy, so we don't have to post margin in the same way as we do for, say, a credit spread. So it makes it generally low risk, small capital investment with, of course, huge reward potential. These are the 4 possible outcomes to a position for our traders. 2 outcomes, we lose money, and it's either we lose a little or we are flat or even make some money out of the losing position. So even if we're wrong, which is either a result of getting the direction wrong or the view on realized volatility, we can systematically identify this and shift our focus to reducing that potential loss. Outcome 3 and 4, we make money. And either we make it a decent amount, 50%, 150% ROI, or we make a lot of money, 500% plus ROI. Now, the catastrophic loss never happens. Now, this is in large part due to the risk-reward profile of the long butterfly strategy. And a matter of fact, since the risk is so small relative to the reward, we don't even use a stop. However, we do have risk management in place, and I think it's absolutely essential to still focus on the risk aspect and ultimately improving that win rate. Now, generally, because the risk reward is so high, you sacrifice the win rate. However, if you have a proper system, you have a way to view probabilities, entries, exit criterias, you can drastically increase that win rate. So if you're interested in learning this strategy, how we approach the markets from a timing perspective, you can visit our website at 0dtetraders.com. Become a member, get access to our alerts, ideas, and really our full options course to learn how to trade 0 DTE options like a professional.